When it comes to picking stocks, it can be incredibly difficult, which is the reason why I do choose ETFs. And in today's video, we're going to be looking at Ken Griffin's massive buys. Now, of course, if you're familiar with this investor, he is worth $38 billion. Founded Citadel in 1990, which has become the most successful hedge fund of all time. Now, in Q2 of 2024, there were two major ETF purchases that were really bought in hand over fist when it comes to building these. Now, Griffin's big buys on the ETFs, the first one was the Spider S&P 500 ETF Trust, which is the ticker symbol SPY. This is one we've talked about before. Now, when it comes to index funds, when it comes to this S&P 500 ETFs, it is one that I personally hold in my portfolio. Now, we like this ETF so much, they added 2 million additional shares, which takes the hedge fund, and again, the most successful, largest hedge fund in the world, to a stake of roughly 57% in that S&P 500 fund. Now, of course, that is a massive purchase. And as we know from this fund, it tracks the S&P 500, which is the 500 largest companies within the United States based on the assets under management, or the AUM. This fund specifically is the most heavily traded ETF in the world. Now, the other one that we're focusing on in this video is looking at the Invesco QQQ ETF, which again is another one that I hold and I have held for a lot of time. They've actually bought 2.82 million shares of the ETF, and they increased their position into the Invesco QQQ by nearly 600%. So when you think of the combination of these two, and that's what I want to look at, is the holdings they have and really what they see, thinking of one of the most successful hedge funds in the world and seeing exactly how they break it down. Now, when it comes to the QQQ, we've seen commercials, we've seen a lot of things on Facebook, we've seen some on YouTube, but this tracks the NASDAQ 100. This is where it is different. The S&P 500 tracks that S&P 500 index. The Invesco QQQ tracks the NASDAQ 100, which is the 100 largest non-financial companies on the NASDAQ stock exchange. So a little bit different because they are not including those financial companies in there. Now, of course, this was launched in 1999. The ETF ranks number 5 based on the value, and it is the one of the 10 heavily traded ETFs that we see in the market today. So why? What was the logic? What was the reason to make the shift and do these really massive purchases when it comes to loading up on these? Now, of course, when it comes to Griffin personally, doesn't really comment, doesn't really say anything that he's doing individually. But when you think of the aggressive buy, not only in the large caps, but in that NASDAQ 100, it is really proven in showing that there could be a really big focus coming, which we know is going to be the case, focusing on artificial intelligence. When you start looking at 9 of the 10 holdings in the Invesco QQQ and AI stocks, that's what they have. So looking again at the top 10 in that Invesco QQQ, 9 of those are heavily focused in that artificial intelligence space. Then you move over to the S&P 500. 10 of the holdings, 8 of the 10 of the holdings are invested in AI stocks. So when you think of the overlap, there is going to be a lot of overlap between these two. But when you start thinking about the 3 stock portfolio, 3 ETF portfolio that we kind of talk about before. Now, this, of course, focuses on the growth factor. For me personally, the big growth factor in here is going to be the QQQ ETF, which is going to be very heavy into technology. This is going to be the one that is going to grow. This is going to be your absolute rock star. When you start looking at the last 5 to 10 years, these ETFs have been performing exceptionally well, and they continue to perform exceptionally well in the marketplace. So these, again, both of these, and I am happy to see that both of these I do hold. And then, of course, when you start looking at bigger picture, the artificial intelligence space, and trying to get that fundamental ETF, this is where the S&P 500 index comes in. Now, of course, I do not own the SPDR, the Spider S&P 500. I own the VOO, which does have a lower expense ratio. That is the reason. And then in comparison to that QQQ, I do own the QQQM. So again, lower expense ratio on both sides. So should you buy these ETFs? That is the question that everybody wants to know. Now, of course, do not make your assumptions on a YouTube video based on what I say, based on what billionaires say. Do not make your investing decisions solely on what other investors are doing. This might be, and honestly, when it comes to doing something like the S&P 500 index funds, it is very important that you do your research before you get into it. But when we look at, billionaires like this, when you look at Warren Buffett, when you look big market picture employing and really going into the S&P 500 is something that a lot of people are saying that is where you should put your money. Really an investment you can put money into on a regular basis. It is going to grow in time, and really set it and forget it. Now, of course, when you look at these two ETFs, you could really say that they're super bullish, not only on the US economy, which we know has been booming. When you start looking at the US based economy, we are about 50% of the global economy in its entirety. Now you couple that with the growth we're seeing with AI stocks, and if you want diversification, both of these are going to provide it. Again, one part is going to be the big growth part, which is that QQQ. One of it is going to be your foundational ETF, which of course is going to be that Vanguard 500 or the S&P 500 from Spider. Those are going to be the foundational. And then the third one that I focus on in that 3 ETF portfolio is really heavily focused on the income. So the generation of income through like a VYM, which is the Vanguard High Yield Fund, or looking at the HD. Those are other ones that I do carry in my portfolio. Now, the reason being, when we see the generation from the HD, it is reinvested into the portfolio, which again does carry the QQQM, and it also does carry the VOO as well as that HD. So as we're getting those dividend distributions every quarter from those ETFs, it is going right back and compounding into what we own in both the growth and that fundamental ETFs, those foundational ETFs that we do provide. And literally it is just going through here. Now, the other one I did want to touch on is the Vanguard Mega Growth ETF. That is what a lot of people do instead of investing in that Invesco QQQ. But of course, you know, the Vanguard one is a little bit cheaper when you start looking at that Mega Growth ETF. But overall, when you look at the expense ratios, that is kind of a little bit different. And of course, the Invesco QQQ has outperformed the Mega Growth Fund over the last 12 months. So you could see a lot more growth out of the QQQ than we see out of that Vanguard Mega Growth ETF, which again is the reason why I personally do own that Invesco QQQ, and as well as that Vanguard S&P 500. Because when you start looking at the annual expense ratio, the Vanguard S&P 500 is only 0.03, where the Spider one, even though it's a 0.09, it is 3 times more expensive to hold the identical funds, because of course, both of those funds, the Vanguard and also the Spider, are tracking the S&P 500 index, which has little to no difference because they're always going in and they're tracking the exact same index. And then again, the QQQM, which focuses on the NASDAQ 100. So taking out all of the financial aspect of those stocks and really putting more of that growth aspect into the technology, into the artificial intelligence that we see. So again, these two ETFs are 2 that I personally hold. These are 2 ETFs that I would highly advise a majority of investors if you're looking to save money, if you're thinking retirement, long-term growth, anything of that nature. Both of these ETFs are going to do incredibly well and have performed incredibly well. Now, of course, when you think of past performance, doesn't really show you what they're going to do in the future. But overall, in the decades that I've been investing, putting money into these and putting it in there on a regular basis has been an absolute game changer when it comes to the growth. So, all right, guys, so that is going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.